if we went back, I talk about 2015-ish, right? That's a time where we could all look back in banking, and if I was to say the word challenger, in FinTech, everybody knows what we're talking about, right? Nowadays, it's like everybody's a FinTech, but I think those of us on the BaaS embedded finance side, we still think very specifically about a FinTech as a non-chartered financial services driven company, right? In their mission statement. Okay. The embedded finance side or the brand side, right? Whether that's Home Depot, HEB, I think Uber's a cool one, right? Chime, Greenlight, et cetera, right? Some of those might fit in like a Chime. They fit into that narrative of challenger, sure. I don't know that Greenlight does. I'm certain that Home Depot or HEB doesn't. That's actually a commercial customer, right? At what point from a regulatory standpoint does all this get lumped under the same... let me say this. At what point in some distant future, if I'm a banker, all of my commercial clients, if they're offering X extensibility from the bank, do they all get lumped under the umbrella of BaaS embedded finance, bleh, right? Because right now we're still talking about everything as if it's mostly Chime Challenger land, right? And not right talking about it as if it's every one of my commercial clients, as long as they're large enough and they're trying to embed something. And where is that defining line? You see what I'm saying? It's just this big, massive gray area to me that I think has to be defined in the future. Am I crazy?
No, and I think that's very similar to part of prior to FinTech. We still had the same types of risks that we're seeing, and I think that's part of what you're talking about.
Like the Southwest Airlines credit card.
Right, but I mean, even if we were to go more basic than that, the principle of FinTech is you have a third party not known to the bank using your rails to send or receive funds.
Perfect.
Right? That's just kind of the elevator pitch.
Can we mark that? That's good.
Yeah. But if we were to take the FinTech sexy word out of it, we still have broker dealers. You have insurance brokers here. You have investments companies here, small investment companies. You have agents of larger investment companies. You have all different ways in which you're dealing with a third party. Some of those merchants, some of those corporate clients are regulated, like most of our investment companies in the U.S. are not, which is lovely. So another unregulated thing, but it all transfers risk to the bank partner. It's just now it's like drinking from a fire hose with FinTech, because now these FinTech companies can onboard, because they're tech companies, they're going to onboard a ton. Now, what we're seeing also in the FinTech space that nobody talks about beyond the Chimes and things like that, there are hundreds of FinTechs that are lending, that are dealing with corporate clients that then have other clients, right? So you're dealing with fourth degree coming into the bank. And nobody's really talking about that because we're talking about the Chimes of the world.
Right.
And Chime does have more regulatory eyes watching it than most of these other FinTechs and LendTechs.
Well, because that's the perceived threat.
Yes, you're right.
The challenger narrative is like a hangover. It's a bad hangover, right? Like almost a decade on, and we're all still terrified of this FinTech threat challenger hangover. And it's like, to me, I actually think we're watching sort of the erosion of the retail business through the Home Depots, the Ubers, etc. And that being more of that retail delivery mechanism. I don't think that's a crazy thought. But those companies doing that retail delivery through extensible banking services becoming the commercial clients, which strengthens, if you think about it, it actually strengthens the narrative of community banking, small business, et cetera, right?
Yeah.
But it's strange that it's like FinTech as a theme is something we can all latch onto and use as a narrative, but we don't think about, to your point, all these other types of businesses that are actually realistically under that same umbrella or should be in the same conversation.
Yeah. Yep.
You know, guys, when you really get down to it, when are we going to get rid of credit unions, right, as a banker?
Right.
Well, that's kind of stupid at this point to even talk like that. And actually, I think it's disrespectful to credit unions to even do that. They've got their place in the world. They're suffering from the same exact thing as community banks. It's the big guys, right? Okay.
Certainly, the one caveat would be definitely an expanded from the original thought. Is that fair?
Well,
Yes.
yeah.
Okay.
But the point
But
being,
if we put that aside, I'm with you 100%.
but the point being, it's kind of silly to talk about that, right? That's not reality anymore. I feel the same thing
Bad target. you
about, whether we want to call it FinTech, BaaS, embedded finance. It's the same thing. And whether that's, helping veterans or whether that's, issuing a rewards program or whether it's, what's the one everybody goes to? Starbucks, right?
mean.
Okay.
Yeah.
So all of this is the same game. Some of this is going to be a positive. Some of this may not be a positive. Some of this is going to be in a whole new market of using these channels as distribution to open new accounts for your bank. Now,
Well said.
when we start talking about cost of deposits or cost of funding or the ability to grow or lending, right? So you've got lending, you've got deposits, you've got all these things that people will actually pay you, and you can make money helping them take over a market that, newsflash, they're going to take over anyway. That cat is out of the bag. Trying to sit and talk about how do we get FinTech back into the box, and it's like exactly
Or-
the way you get rid of credit unions.
Or how
You
do
learn
we
to live
combat
with
it?
Right.
and you learn to live with it and compete with them on levels that they're not set to compete with.
Can I attack that with a metaphor? Your metaphor here would be Rocket Mortgage, Cross River Bank as the sponsor, and you're basically saying, should we talk about how to compete with Rocket Mortgage? Okay, as a banker, and with technology, and or, to your point, should we figure out how to partner and be the sponsor behind it, and are we actually competing with Cross River Bank?
Exactly. And if you want to compete with them, there's a couple of ways you can do this. I would go find.
If you went back
So-
to my point of
but hang on,
2015,
I would go find somebody that I think is going to
Challenger.
whip their ass, right? And I'd want to be that guy's sponsor back. That's a smart play. Standing here, and I guess if I've had that, pound the table here, man, guys, putting your head in the sand is not the answer. And I'm not saying you need to do anything, but learn. It's free. It doesn't hurt you to learn all about it and understand it at a level that you don't today. And I'll bet you will find just what we've been talking about all afternoon out there, is that they're not here to kill it, they're here to control it better.
well, the question I think on the table is this a systemic shift? Is this a transformational shift in how banking services are delivered? Certainly at the retail level, business being a little more in question. I mean,
Duh.
all roads lead to Rome, I think. What do you think? Are we crazy?
No, I mean, I think there's room for everyone at the table. I just think they all have to be dressed well. They have to have good manners.
So I'm not invited. Got
Right.
it. Got it.
And I feel like
Okay.
right now our fintechs have not been sent to cotillion, and our bankers have, and and I feel like that's not fair because we're all getting served the same meal,
Agreed.
and it's not. And I do love fintechs; they're my clients, but I only work with the fintechs that want to get it right.
Right.
And I have a good sniffer for those that don't want to get it right. But I know that community banks, and I've said this a million times, are well positioned to be good bank partners, to be the best bank partners.
Right.
They just have to be comfortable being in the red first.
Right.
And the board's never coached on that. And when I'm in front of a board and they're like fintech, or cannabis, or whatever the new thing is that they want to do, it's like, all right, how comfortable are you being in the red? Ooh,
Investing in something,
yeah,
frankly.
right.
Right.
But they all stare at the red numbers and they freak out.
What about just us sitting here? Like, tell me we all weren't in the red on this topic
Right.
for
man,
like
I'll
a
tell
number
you,
of years,
straight
right?
up, I'll guarantee you I've blown $1 million at least.
I promise
At
you.
least trying to educate, learn, build out databases, create, and understand.
Right.
And then when you reach a moment where you're like, I get it. Okay. I get all of it. And I don't mean that smarty pants. I just mean you do it at a certain point. And then you go, okay, there's right ways and there's dumb ways. But if you went the right way, to the idea of going in the red, you don't even have to go in the red.
Yeah.
You have to just start slow.
Yeah.
And this is, you want to learn how to talk to girls in high school, start slow. Mm-hmm. If you run out there and hit every girl in high school the first day and ask them all out, it's not going to end well for you, buddy. Right. But if you'll go out there and try to work your game a little bit and understand this, and what I try to talk to bankers about is launch one. Mm-hmm. Launch it in something you already know. Yeah. Right? Maybe that's 401k, or maybe that's,
even
I don't
prior,
know. I mean, I'm just saying, it doesn't matter. Yeah. And maybe you're going to embed finance into your biggest merchant client one time and see how this goes. Okay. You haven't overwhelmed yourself with compliance because it's such a finite little thing you're doing. Is it only here's a good one. Lending requires a whole set of regulations. Mm-hmm. Deposits requires, and cards and opening up, that's a whole other set of regulations. Why don't you focus on one just for a year?
Right.
But to the point,
and then next year, maybe we could do two.
Right.
Lots of banks
we don't have to rush into this.
Yeah. Lots of banks that I think we would agree have done a good job on a good path that have taken a multi-year approach. They've showed up and said, funny enough, it's typically the person, let's form this role, kind of a FinTech embedded finance BaaS role, right? Let's bring somebody on to be in this position and let's give them top-down support with oversight, sure, and also the breadth of support so that they've got enough control throughout the organization, right, to move chess pieces with some oversight. And if you watch that evolve over a couple of years, if that's your red, what's one mid to senior head count? That's not going to break anybody. And the education that goes on throughout the whole organization is tremendous. Even if you pulled the plug, you learned a ton, right? But most of what we see is that as a starting point, rather than trying to figure out how do I get to the starting line, let's figure out how we train for the track meet before we get to the starting line, right? Let's try and bring on the right position. I hate the word culture, but let's try and get the education within the organization built out, the right position, and how do we internally eat this elephant?
Guys, in Texas, it's easy. I talk to bankers all the time. I'm like, you remember Darryl Raw, right? I mean, we're talking the wishbone man. And when everybody says, okay, we're going to go this West Coast spread offense, there's people that are still rolling over in their grave over that one, right? But at the same time, you want to play football today, and what do I think Texas' advantage might be when they move into the SEC, right? Well, it's going to be throwing the football. All right. Everybody's like, yeah, man, I get that. That's exactly where we're at in banking. Better hire somebody on your staff that knows something about it or can learn something about it and coach up the rest of the coaching program. Now we can get out here and play on multiple levels or decide not to. This is what's so, I don't want to say pathetic, but why the hell would you not try to learn more about this when you can see the tidal wave? Because it's easy to listen and go, well, look, all these people are in consent orders. Guys, out of 133 of them, I guarantee you they're not all under consent orders. And this is by design, and we talk to the regulators all the time.
If they were, why? And was that by design?
Right, and that's what I'm trying to tell everybody. It's not like we don't talk to these people. They're telling us we don't want to kill it. We're out here trying to make a case of how to do it right. Okay. The best way to do that is take the people that did it wrong and just slap the shit out of them.
But real quick, I really want your input here. There's been a shifting focus look, the entire topic was invisible a couple of years ago, right? At the most. And then
She told me earlier, she said, man, AML just wasn't that big a deal.
Okay, this is where I was heading.
And that is.
So, and then maybe 6 or so months ago, we got into connectors, BaaS platforms, the right way, the wrong way. Obviously, the direct model is the right way. And since then, in the last 6 months, we've really started to tick down through the obvious things that I think we all would have expected. But people like you have been screaming for years of, why is this a foregone conclusion? Why aren't we talking about this? And now we're in your wheelhouse. Mm-hmm. Yeah. What do you think? Finally?
We're from the nerd to the coolest chick in town, right? Yeah.
I mean...
Exactly. I know the feeling, man. I'm that guy, too. I'm the goofball that turned into a data guy.
Yeah, it's... it's all easily avoided.
It is.
And that's what gets me. It's not this insurmountable problem. It's part of it is, yes, go slow, but even when banks go slow, they still don't have an AML and sanctions person. They have a compliance person, which is not the same thing. Lending compliance is not the same animal.
Right.
It's not, it's very linear, right? It's don't do this, or these are your guardrails. And in AML and sanctions, that is a different animal. It's a different way you have to think about how rails are going to be exploited, how your onboarding process is going to be
Exploited's a good
used.
word, because
Yeah.
isn't fintech, I mean, the whole idea, right? Let's go back to challengers real quick. Wouldn't a banker tell you that these challengers have exploited?
right. Yes.
Right?
Uh,
And I mean, you would have to argue, I know you would argue and beat my ass over this, but the fintechs have exploited the lack of regulation,
absolutely.
right? And the holes in the boat here, and
Yeah.
the banks as the in facto.
Yes. Uh-huh.
And
The
must
in
fill the
facto.
hole. I love it.
Well, so when I lecture at the National War College and when I train federal law enforcement
That's
agencies,
super cool, by the way.
it blows their minds. I mean, these are top level DOD and government officials that are hand selected for different national security positions, and they're sitting there and they're like, "That's not true," and I'm like, "Oh, it's 100% true," and I'm like, "And here's how," and then I show them all of the things, and then I always end with a joke, and I'm like, and if you know anyone at FinCEN, can you ask them to remove the 4 loopholes, right? It's like a standing joke, because I do know people at FinCEN. I'm just waiting for them to remove those loopholes. But, part of this issue is that when we look at national security threats in countries that are not friendly to us, we go back and forth, number 1, number 2 position with China as the number 1 place to start a fintech, right? Now, it's the beauty of the entrepreneurial spirit that everyone comes to the U.S. looking for, right? I love that. But that's not the main reason, right? The main reason is because it's low friction, low lift for any payment company coming from outside the U.S. And I've worked with many that are not U.S. based, and they call me up and they're like, "Hey, we have this full payment product in the U.K. or in Australia. Can you tell us what our requirements would be to launch that here?" And I'm like, "Oh yeah, well, stay out of New York, and then you're good to go.
Point me towards the open
Strict
API,
rule, yeah.
right? Yeah.
Stay out of New York, and here's your 4 loopholes,
Yeah.
and that's the law, right?" And I hate it, but that's the case. Now, of course, I don't just leave it there, right? I tell them, if you want a bank partner here in the United States, right, you'll have to do all this stuff. So I don't just leave it there. But the fact that our nascent regulatory framework allows non-U.S. fintechs to enter the market, further adding challenger issues from non-U.S. fintechs or banks that spin out fintechs that then come to the U.S. That is really bothersome to me.
Will you
watch
touch on
over
that?
time, though, if you actually read consent orders,
Yeah.
if you're weird enough to do that,
Yeah, I'm
you'll
weird
see
enough.
over time. I mean, it's not the same. It's shifted, man. There was a lot of regulation issues there. There's UDAP violations in there. There's a lot of fair lending things in there, and now almost all of it has shifted over to AML BSA. AML BSA. Am I right on that?
Yep, 100%.
When we were talking earlier today, I was just that. Is it too big to fail? Well, we've already lived that one once, right? That's why we came up with that term in the first place. And then we have this too big or growing too fast, NYCB, whoever you want to fill in the dot there, right?
Scale.
Okay.
Yeah.
Scale. And at some point when you go back to the origins of what this is all about, FDIC, we're not having bank runs, protecting people, so you don't put your money under the mattress. It wasn't about 4 big banks, or it wasn't about regional $100 billion banks. It was about community banks, and it's actually the solution to the problem to have more of them and less of these other guys. And it's like, well, you don't understand. You can't work with Halliburton. I'm like, then Halliburton needs to learn how to do participations and work with you. Okay,
So what you're saying is, in the thesis of protecting the consumer, the fintech mantra, you're saying that community banks are actually the OG of that topic.
That's it.
I love that.
And we need more of them and more BAS
I agree.
Yeah.
banks at the community bank level. It's such a sweet spot for community banks because of the way that everything is set up for them to succeed. And it's frustrating to sit and watch a guy going, yeah, we've ran up to 5.5% on our savings account, and I'm like, that must hurt. That's your cost of funds, bud. There went your margins. Everything's a mess after that. But if you could get somebody to pay you to bring in those deposits, and you're not only not paying 5.5%, you're actually doing pretty cool here and making money off this game. And they're not geographically bound. They can go play and do all kinds of stuff and help you help them. Everybody wins here. And you are competing at a game that is very difficult for large institutions to come down and play at. And there's Durbin and other things that make it really, really tough for these guys to play here. This is your sweet spot.
Well, how much requires a charter, and what is the damn value of a charter?
I'll tell you one thing.
It's
Man,
what
can I
everybody
answer that?
wants.
I'm going to tell you what. Everybody's going to know what the value of a charter is when we get down to about 2,500 bucks.
Yeah.
All of a sudden it'll be, my God, how do I get a charter?
But you and I talk to them all day on the FinTech side of, I want to do this, I want to do that, and it's like, yeah, get a charter, bud.
Yeah.
You need a sponsor.
Yeah. Which we are seeing, especially since 2022 and then a few last year, we saw a few banks with public consent orders. There were several more behind the scenes that never made it to a public consent order that were more MRIAs that had to do with fintechs gobbling up a tiny community bank, right, and using their charter to do whatever they were
caught on to
supposed to
that
do.
one.
Right,
and
yeah.
a few years before that,
Farmington,
we
yeah.
saw some of the big names in FinTech legally buying charters. So
Yeah.
they're putting the ends to that, right?
Right,
Yeah.
but part of
SoFi
that,
bought a $56 million bank and overnight put $850 million
right,
into it.
yeah.
Poof.
Frowned upon.
But part of that is our regulators, I don't believe, are educated enough on fintechs to be able to say, "Ooh, I see some indicators. Even though you're telling me you aren't going to do much with this charter, interesting that you are known for this, or you have this in your background, or right the vetting on that side doesn't seem to be as strong."
Can I just point out, like, shouldn't there be something from the whole of community banking, like, hats off to you, like, because we don't blow up a charter or repurpose a charter, and that community still sits as it sits, right? And you're actually coming out fresh, trying to serve a new constituent group, a new community, right? I've always thought this, and maybe I'm the crazy bad guy, I'll say it. Where's the people looking down their nose when somebody sells their charter?
Yeah.
Yeah.
I mean, you got to feel the same way if somebody sells whatever, entrepreneur sells whatever company, right?
I said that in front of a
There's
group
some
of-
bad stuff that come from
a
it.
month ago, and I was like, why is everybody like, great job, Johnny,
Way
way
to
to
go,
go? And
you
I'm
sold
like,
your
how about
bank?
everybody
And I'm
shoot
like,
the finger and say, hey, man,
What
let
happened to
us
the
down.
town, right? What
Yeah.
happened to
Right.
that
And
town?
I mean, you could hear a pin drop when
Yeah.
I said, I was like, okay,
That's
that didn't go
actually
over very
pretty
well.
uncool,
Right.
but yeah, I guess
don't
we're
get
uncool
it
for
yet,
saying
right?
it.
Right.
Like, it's
We
not
must
cool.
think more holistically.
Yeah.
If you think about just startup land, right? I mean, I know you and I take it seriously, whether it's our company or others. A board seat is not something I take lightly. Like, I might go to jail, right? I mean, seriously, right?
You would go to jail.
I mean, I would be the guy to go to jail. We all know that, but right? And I mean, I think it's not a bad thing. Kidding aside, for bank boards to take that same thesis of ownership, right? And to your point, I mean, when you have a real seat at the table from that standpoint, you take it pretty damn seriously, which means that you as an organization are taking it seriously, and these are things to be taken seriously. And if that was the case, these issues wouldn't arise.
Yes. We were talking earlier about how, to me, money laundering is very sexy, and I always think that you can capture an audience by talking about that. Nobody wants to talk about loan compliance or or HMDA or any, right? That is not sexy. Yeah. Money laundering, human trafficking, drug trafficking, right? Terrorist financing.
Places to make an impact.
Right, and everyone wants to be a hero.
Yeah.
And as soon as you can talk to a bank board, and I had seen this change before my eyes, dealing with different banks and their boards. And what I do is I ask, give me an hour in your data. Let me find what I know I'm going to find. And then I will come and I will tell you about it. And then you will all have an oh shit moment, right? And then you'll be like, but it changes completely their view. And then they start asking their AML officer questions. Hey, so how many SARs did we file this month for human trafficking? Right?
Can I ask a
Yeah.
pointed question on that? And it's just sentiment. Is it the oh shit moment of, oh, we'd be in trouble? Or is it the oh shit moment of, wow, we could really make an impact?
That one. It's the second one. Because everyone, like we were talking about earlier, everyone has some kid in their life.
Bad guy.
Right. And everyone has some kid or some woman or some person in their life that they
got all of
automatically think, oh my gosh, if that happened to my grandkid or to my daughter or to my cousin, right, that would just wreck me. Yep. And so they automatically identify with that, and it changes how they view their role as a board member.
Save somebody.
Yes.
I believe in that.
Yeah.
This is why, okay, you guys have hit why I'm such a freak about community banking, man. I mean, these are people that sweat over fire. These are people that lay their hearts out to raise money for the smallest thing. I always use the example of cheerleading uniforms or new helmets for the football team. Man, these people care. They absolutely care.
During COVID and PvP, they showed.
Yes,
oh my
100%.
God,
yeah.
Showed up.
They sure did. And you know, it's. I watch these T2T commercials, you know, and I mean, man, it just tears my heart out. And it's like, that's the way I feel about community banking, is that these people, every time we need them, they're there.
Yeah.
And every time we turn our back and make another rule or another thing, and then when we really do have something cool that can help them, well, then we go give a bunch of bad, or get the sentiment turned against something to where now they're like, oh, I'm scared of bass, or I'm scared of this stuff, right? And
so that somebody could make $1 on their back.
This point that you're making, when you can walk in there and show somebody that you can actually save people, this is exactly who they are.
Yep.
They're the people that run towards the fire. They're the people
doubt.
that run towards problems, and they're problem solvers. They're heroes. They have the heart to do this. They're not the people that lay off 3,000 people and don't bat an eye over it.
Right.
They actually care about their workers. They care about their community.
I think the three of us can vouch for that. We know these people.
I've seen it. We all have. And you're right. Being on top of AML, you're a better banker, and you're actually doing some good.
Yeah.
And they care, and I think you're right. If you show them these things, it's a game changer.
Yeah. It's never a I don't care attitude. It's a I don't. Well, of course it doesn't happen here because they think the best of their community.
Not
as
in
they
my
should.
town. Not in my town. Yeah.
But it happens in every community, and if you are the predominant institution in that community, those dirty funds are flowing through your bank.
Man, I'll tell you what, y'all. I'm gonna tell bad things here, but I know bad people that have told me, for a matter of fact, that they're not trying to go to the biggest banks to do a lot of bad things. They're actually targeting smaller banks because they're a little more unaware, right? And so let's look at the dollar per dollar spend that the larger banks spend on AML. They spend a lot more money. Pound for pound, I'm not impressed. Not one bit.
Agreed.
And it doesn't take that much for a community banker to be able to go, I learned a ton from this. I helped a lot of people along the way here, and I set up new revenue streams for myself doing it. That's a win.
Yep.
And that's what they're about anyway. I think it's just a messaging issue. Well, so-and-so got on consent orders. Who gives a shit? That's not you. Doesn't mean you have to.
Yeah. Well, you just got to learn from, like, hashtag don't be a guy, right?
In fact,
right, in fact.
In fact,
Which is why, like, I have become the yellow highlighter girl. That's what they're like, hey, can't wait for your yellow highlights. I'm like, all right, cool. Right? It's because and I don't ever do that to embarrass the bank, and you'll find that I never tag the bank in my posts. Right? Because I'm not here to, like, throw salt on the wound.
I've seen posts from you where I know exactly who you're talking about.
Right.
And even in the comments, people commenting, you won't even go back.
I mean, we have conversations off the record that would just...
Right. But
smoking fire.
Yeah.
But I feel like a wise...
You protect the good guys.
A wise community banker should learn from the mistakes of others. And there are indicators from each of these consent orders that are easy things for them to go, oh crap, is that happening in my bank? Let me fix it.
Well, we
And-
have to share.
yeah.
I think to your point, we got to share the stories,
Yeah,
however unpopular, so that everybody can learn from them.
yeah,
Even, and if we can be careful about making sure that nobody's feelings get publicly hurt.
right.
Sure.
Yeah.
Yeah.
Now there's
Okay.
some times where I've not agreed with the regulators, and I've made that clear.
Once, twice, or
Yeah, just a few times.
they
Yeah.
have
Well,
a difficult task, though. I mean, to be fair,
yeah.
it's kind of what we do all day, every day, from the data and everything else, and talking to bankers and vendors and everybody else. We get to spend all of our time trying to keep up with the bleeding edge, and it's a chore.
Yeah.
And I don't have a day job other than this, right? This is what we do all day, every day, and it's a chore. I'm
Yeah.
not saying I'm the sharpest, but it's a lot to keep up with. And I think
Pretty
if,
sharp.
if you were a regulator, if you're a banker, if
Yeah.
you're a vendor, if you're anything else, and you have a normal day job of what your prime directive is,
Yeah.
good luck.
Yeah.
And that hill is a lot steeper than it was 5 years ago, 10 years ago.
But you still got to learn the spread offense.
But
Yeah.
you still got to go out and play football games.
Yeah.
That's it, man.
Well, and I'm not sure I said this on the webinar that we did a couple months ago,
Which
but
was great, by the way.
January.
Like a gazillion people showed up,
Oh.
and tons of messages.
Oh, Jason.
I got all kinds of credit as thank yous for bringing you. So
Oh,
way to
thank
go, man.
Oh, thanks.
Yeah,
You made me look pretty good.
yeah, I look real good. Thanks, man.
She made me look
Yeah,
smart.
yeah.
Well, the thing that banks need to know is that all these slow, like this kind of slow trickle that we've seen, and then now like the flow's getting a little bit harder. It's just going to get harder and harder this year, and by next year, I think it's going to be a full-blown fire hose in terms of consent orders. Now, that bugs me for two reasons. One, these examiners have had years of exams.
It's
Right.
policy making through.
Yes. And I don't like that. But two, it's partly because in the AML Act, we have an examiner boot camp that we baked in there to make sure.
They're
because
getting better, is what you're saying.
yeah, but not better at the gotcha. That's not the purpose of the examiner boot camp. The purpose of the examiner boot camp was that part of the AML Act was because I was tired of knowing that the NCOA does not examine. We're all reading from the same playbook. It is the FFIEC BSA AML exam manual. It is the same thing, all the transaction testing. And the NCOA is supposed to be testing from that, and the OCC is supposed to be testing from that, and everyone in between. And yet we have all these banks under the OCC that are under consent orders and nothing under the NCOA.
Well,
And that bugs me.
if you look
It's
at
not just.
That's a damn
OCC,
good point.
oh, it's a huge point. The OCC versus state chartered institutions.
Yeah, uh-huh.
And to your point, I think a lot of the behind the scenes non-publics have been state charters.
Yeah. So, kind of going back to what you said earlier, the thing I've said for years is if I were to ever be a criminal, which I will never ever be a criminal, but if I were to ever turn
You
to the
could
dark
try,
side,
you know, I mean, for a day or two.
I would go to a credit union and I would go to a community bank because they don't have this huge technology, lake really
Yeah.
of what they have at tier 1 banks, and they don't have 3,500 analysts like Bank of America has, right? They have the trust of their
I
community
noticed you didn't say
banker.
Wells Fargo.
And Wells Fargo and the rest of them. Well, Wells I think has a little bit more,
Right.
but yeah,
Well, you still can't get it right.
right, yeah.
There's a lot wrong, but there's a lot right.
Yeah.
And
And there's a
it's
lot that
awful
can be
hard
fixed.
when we're just flooded with consent orders and we're flooded with this thing and that thing. It's sometimes really hard to see. I
Yeah.
just think overall, like our economy, our people as Americans right now, I think everybody's starting to kind of tap their toe. They're starting to get the groove going. I think we're going to turn the corner here, right? We're not going to go down forever.
Right.
All right. I remember that feeling, the Jimmy Carter to Ronald Reagan transition of hope, and the consent orders and the damage of let's innovate. Boy, man, you got to be pretty gutsy right now to think about that, and a lot of them still are. But I think that we're about to reach a moment where interest rates begin to ease up, start coming down. Banking is going to have a lot of opportunities. Lending will revive itself. There'll be a lot of neat things that come out of this. This is a moment in time to really lean into this and get hopeful. I think it's a really good time.
Yeah,
But
I would agree.
it's not the calm before the storm. It's the damn storm's about to clear, and we're going to get our beach towels out and go have some fun, right?
Right.
And everybody's. This is a good time to go find your lawn chair, get your beach towels, find your old bathing suit. You know, get all this stuff figured out. And I mean, what the hell else you doing? We're not making lots of loans. We're not able to grow
Right.
deposits. Why don't we educate ourselves right now?
Yeah.
Great time to do it.
Yeah. Yeah, and there's lots of fintechs. I mean, every second I feel like there's a fintech.
They're pouring in, just
Yeah.
pouring in.
Yeah,
But
we
we
just
do a
need.
poor job of, you know, we had that cool conversation today about tying the actual financial strategic goals of the bank
Yeah.
to the revenue streams that the potential fintech can, or the fintech potential could drive.
Yeah.
And we can't connect those dots very well
Yeah.
today,
Yeah.
but we're getting better.
Yeah.
Are we getting better?
Something like that.
We're not getting worse.
Yep.
Still one of these beers,
I
allegedly.
tell you what,
I'm gonna money launder this beer real quick.